Good morning, traders. Chris Buss here with your morning look at markets for Thursday, the 9th of September. It is 6:30 as I'm starting the video. As always, run that video player at 1.25x. I think you'll be very pleased with that speed. Taking a quick look at markets, ES and NQ are off just a little bit, maybe 0.2%. Small caps off more, about 0.44%. Oil and gold look to be flat. Copper is up 1.2%. On the macro front, we've got jobless claims, as always on a Thursday. Because of the Labor Day holiday, we've got both oil and nat gas inventories at, I believe that's 10:30. And we've got a ton of FOMC speakers today. I think like 7 or 8 of them, scattered all over creation, having their comments. So I'm sure you'll see little news flashes about that. I'm sure they'll all be, talking about last week's jobs report and the outlook and all this kind of stuff. They're going to be having a meeting, I think it's September 22nd. Last week of September on their next rate decision. Probably most important this morning is there's a big ECB meeting over in Europe, and there's been a lot of chatter about the possibility that the ECB will announce a tapering program prior to the Fed doing so. And I'll believe it when I hear it. I think for the most part, the ECB follows the Fed's lead. I don't know what kind of ramifications there would be if they, announced a taper before the FOMC. We'll have to see, but that's out there, and I'm sure you'll be hearing a lot about that this morning, especially if they do something. If they just, stay steady on the course, you probably won't hear a whole lot. Over on the earnings front, we've got Academy Sports, ticker ASO, before the bell. We've got Lovesac before the bell. And after the bell, we've got Affirmed. Remember, that's the one we were in, and we got the big gap up on the partnership with, I believe it was Amazon. And then Zscaler as well after the bell. Now, as far as last night goes, Lulu had an absolute moonshot. I think it's up like $50, $60 maybe, up in the mid 400s, like 435 the last time I looked. I think it closed closed yesterday like 378. So it was like a monster move. So that's going to set up great for either a second day bracket trade, or if you like to actively trade that kind of a setup, that would be certainly one to watch. There's going to be a massive gap below, which is fine. Doesn't mean it necessarily fills like right away, but that'll be a big opportunity when that gap is entered. So that's certainly one you're going to want to alarm today. And then there's also GameStop, which had their earnings call, if you can call it that, down 10%. There was some chatter yesterday about a partnership with AMC, two meme stocks, but I think that's just all chatter and hype, and they're doing anything to keep this ball in the air. Both of them really has been the savior of their respective companies. When the stock goes from bankruptcy watch to high flyer in a matter of a couple of months, it's really given them a whole new lease on life. So let's get into it here. I'm going to jump ahead to just taking a look at the VIX. Of course, the dollar was up a little bit yesterday. The 10-year bond yield dipped a little bit yesterday. The big bond auction, the 10-year auction at 1 o'clock turned into being a nothing burger. There was good demand. Didn't really move rates a whole lot. And one thing I did forget is there's the 30-year bond auction at 1 o'clock today. Given the lack of movement based on the 10-year auction yesterday, I don't think it's going to be a big market mover today. Something to be aware of at 1 o'clock. But given what didn't happen yesterday, I don't think there's going to be a big thing today. I looked at the oscillators, the NIMO and the NAMO that we keep track of. Those took significant drops yesterday. So now both of them are smack dab in the middle of the range, not really predictive going forward until they reach extremes. So no need to look at those. So yesterday we had a rather soggy day of trading. Looks like we're setting up that way here this morning as well. Taking a look at the VIX. Yesterday we broke well above 18, came into the mid to high 19s for a few minutes, and then closed back right at 18 right here. And that was our first layer of resistance on this path up off of the lows. And I would still key off the VIX if they're selling in the morning session. I wouldn't be surprised if this makes a push towards 20. Remember what we said, a breakout above 20 is going to open up a lot of downside for equities, because you've got the potential here of a spike up towards 25, and we've seen that the last couple of times. And it's also interesting to note that if you go back in your charts, I'm talking about SPY and QQQ, the most recent sell-offs, these spikes here have been tied to options expiration, which for September is next Friday, September 17th, I think it is. You can see here, third Friday of the month lines up well with these spikes in volatility. So keep that in mind as we trade the balance of this week, and keep the VIX front and center on your watch list today. Equal weight SPY. I mean, basically nothing yesterday. Six basis point move, flat. We're sitting right on the 20 within the uptrend channel. Not a reason to get panicky at this point. What I would be watching is for a break below 155. And you can see it right here. The intersection of the uptrend channel and the 20 EMA. Those should both act as support today. But if they don't, if there's a big red candle and it breaks lower, the next level you got to look at is the 50 EMA, and that comes in at 153.37. And then, of course, the top of the box is 152. So those are the next two levels below that we need to be aware of. And really, these bearish divergences continue to be in place. And remember what we always say, that's not a sell signal, but it is a warning sign that momentum in RSI has been coming out of the system even as we moved higher in price. So there's definitely the potential there for a further bout of volatility. And I would my mentality at this point is to be relatively cautious. Why? September's a notoriously volatile month. We've got OPEX, September OPEX next week, and we've seen the last 2 or 3 episodes of elevated volatility heading into the monthly options expiration. So that's what we're looking at over the next week or so of trading. So I don't think it's a particularly great time to be bold. I think it's a time where you manage what you've got. And if things continue to, with whatever holdings you have, if they're holding up, keep them. If they begin to fall apart or erode, let them go. Keep your stops relatively tight, protect your capital, and understand that the next week or so could be volatile. And if it turns out not to happen, then that's fine too. So one of the things that yesterday did for us gave us some very, very clear lines to look at this morning and today and going forward. Let me show you what I mean. So this is a SPY 2-hour. We came down. Yesterday, we were talking about 451. Remember that? We said 451 was important to hold at the midpoint of the channel and where these other locations served as support. Well, that broke, right? And we said the next level down was 449. We came down to that level, and you can see where that level came from. It's right here. There was a reaction level there. And so 449 held, and then we had an afternoon bounce up to 451. So just from a technical perspective, we lost a level from above. That's bearish. That's a technical sell signal for active traders. So you get the move down to the first level of support and you get a bounce. Pretty routine stuff. Now the key this morning is where? The key is 451. Why? Because what was once support is now resistance. We traded up to 451, but we could not close above. So from a technical standpoint, the door is still open for a down move. To come back down, test 449, see if it holds, and if it doesn't, move down to the next level of support, which I see as give or take 447, because that was this location here where we've got kind of the last significant volume over price support bar, and we've already had a reaction here at the midpoint, and this is where the uptrend channel line, the channel low, comes into play. So there's 2 layers of support there at 447. That would complete or check an important technical box, which is you go from the bottom of the channel to the top of the channel, and then over time you find the bottom of the channel. So if this bottom of the channel is tagged, whether it's today or tomorrow or next week, that's an objective place to try along against a well-defined level. So, okay, let's look at the positive side. If price can break out above 451, recapture the midpoint of the channel, recapture this resistance level, then that's going to be bullish. and you open the door back to new highs at 453 and a half. Here it is on a blown up scale. Coming down, we had the support level on the 30-minute chart, came in at 449 and a half. And I think that's a good level if you're trading, on a 30-minute time frame or less. You can see right here at 451, spent a good couple of hours at the end of the day, could not get above 451. So, that in and of itself, when you look at that kind of price action, you can tell that price knows that line is resistance. When you get a nice bounce and it comes up right to a level and then can't get through for 2 hours, there's decent resistance there. So just like we discussed, a break above and a hold of 451 would be bullish. You can buy that and look for 452 and then 453 and a half. Since we're opening, it looks to be like we're opening marginally red, right? 0.2% or something. That's going to put price in here. If you see price try to make a little rally on the open and get stalled at 451, if you're an active trader, you can take a short there against 451 with a stop just above and play for either one, a rollover to 449.50, or your second target would be down here at 448, 447.50, right in this area. I would call that a support zone. We've got a large volume over price bar here, and we've got a gap just below. So, on a break of 449.50, I see this coming down, maybe get a little reactionary bounce at 448. But then remember, from the 2-hour chart, 447 was where the 2-hour channel comes into play. So I would expect the 30-minute chart to come down into 447 and test this gap if it in fact rolls over. Also, what bulls want to see is, we've had a steady bleed off in RSI and momentum, and now RSI is below 50, as is PPO below its zero line. That puts both of them in their bearish regimes. So, to get really bullish, you got to see these turn up and then move back above the zero line in momentum and break out above this downtrend line on RSI and get RSI above 50. That would give me a very warm and fuzzy feeling that things were looking more bullish when the indicators give confirmation of a move higher in price. So 2-hour, very much the same kind of discussion. We talked about this 380.50 as being a level. We lost that yesterday, but we came right down here to this 378.50 level and found some support there and got a bounce. Now, I think this morning that 380.50 is your pivot. If it can hold that, great. You can get a push back up towards the highs. And if it gets rejected there, look for another test of these lows down towards, let's call it 378.50. We'll see it better here. Yeah. We had 379 marked as our support level. That lined up with this one. But you can see down here there was a little undercut. And we did undercut it a little here before it found support. So you could make a case for moving this down 50 cents if you wanted. but I don't think it's going to make much difference, to be honest with you. If this rolls over and takes out 379, it's probably going to move down into this 377 range like we talked about yesterday as potential downside targets. So I would key off of 380.50 on the upside and then 379 on the downside as a support level. This is not a good look. I mean, honestly, we had this really nice move off the floor, off the bottom of the range here, but now it's rolled over. And as you can see, we lost 224 yesterday. And so for me, yeah, I mean, you never want to see price go back into a prior trading range. That's a bearish look for sure. We're off 0.4% heading into the open this morning. Certainly not so far gone that there can't be a recovery. I'm not saying that. There's always a chance for an upside or a reversal, but certainly not the look that you would want or expect if small caps were still giving you a bullish type of outlook or forecast. What I did here, I just wanted to throw these on, is I put on in brown here. I hope you can see that, a lot of lines. But I put on the Fibonacci retracement tool, and you can see of this entire move, all we've done is pull back to the 38% level, and well within reason of what you'd expect on a retracement. But if the pre-market trend holds, we may come back in here to the 50% retracement down at 220, and then at that point you're back in the soup. You're back in that big trading range that we were looking trading around and watching for so long. So to me, I'm not going to really get all excited until price can come back and take out 224 and take out 225 from below. And you can see that right here quite easily, toggling here just below 224. That's definitely a pivot point. So I would key off of that level. And here's your intermediate targets above and below. I think to get going, it's got to hold 224, come up here, and then take out this downtrend line at say 225.25 right in here, and then get back on the upward cycle. Notice that the RSI and PPO are well below their midpoints of the indicators. Facebook. Before I get into FATMAAN, I want to welcome any new visitors to the channel. Really appreciate you spending some time here. I think if you appreciate technical analysis, want to have all the key levels laid out for you with a little game plan, if you're an active trader, I think over time you're going to be able to trust my levels and then work on building your skill set around your trading, around your execution of trading, by being able to lean on my levels. It's one thing I think I do well is give you the key levels and the resistance and the support areas with a little game plan. And I think if you integrate that in to your pre-market and post-market routine, I think you're going to become a better trader. If you feel the same way, hit the subscribe button and the alarm bell, get notified of all when I publish content. And also, if you look over in the show notes, there's a place for you. There's a link to the blog site where you can drop in your email. It takes 15 seconds, and then you'll get all my content. Got some things in the works that I think are going to benefit everybody, and certainly would like to have you along for the ride. And also longtime subscribers, really appreciate your support and being here. Please pass the link along to friends, families, other traders, Facebook groups, Twitter feeds. All that stuff helps me build the channel, and I really, really appreciate it. So moving on to FATMAAN. Yesterday we had that nice entry. Day before, Tuesday, had the nice entry on the back touch of 373. They took most of that back yesterday. Came down to 375. Again, a well-defined area that we talked about. So right here in the middle, I don't think there's much to do. If you got a pullback into 375 or 373, I think you can buy it there with a tight stop below. Otherwise, I think you got to wait until 379 is taken out and get long there and look for a gap fill and a move back up to at least 383 on this move here if things get bullish this morning. So I think it's pretty clear on this chart where the support lies. It's at 375 and 373 at the top of this old gap. So some very clear lines to shoot against. Apple, bad day at the office. It had been on a nice run. I dropped in a little trend line here just for visual reference. We had two impulsive down bars to start the day, and then spent the rest of the day bouncing. But when you look at the totality of the structure, it looks a lot like a bear flag to me. A big move down. Here's your flagging action. And so this morning, what would trigger that flag would be a break back below 154.50 right here. So you come down with an impulsive move, you get a little reflexive bear flag bounce, and then the bear flag triggers when price drops out. So if you lost 154.50, then the measured move is down to $2 lower, down to 152.5. And I wouldn't be surprised if that happened, if it didn't go ahead and fill this gap and potentially come all the way down to 150, 150. If there's some turbulence, if there's some selling pressure, you may just see this flag break down and then go into this key level here at 151. So keep that in mind. But as long as it holds 154.50, I think bulls are fine. And certainly if it recaptured 156 right here, then that certainly would be a bullish development. Tesla, very much kind of like the same thing. I don't think this really fits into a bear flag structure like Apple did, but working its way up within a rising channel, that certainly looks bullish. Notice here, we've got PPO remaining above the zero line, bullish. We've got RSI above 50, bullish. We've got price near the highs, bullish. So this chart looks a lot more constructive on a short-term basis than, say, Facebook or Apple, where the indicators have dropped into, their bearish regimes. Whenever you have a question or you're a little undecided about the posture of a stock or a price, you can always just look at your indicators, and if they're above their median point of the range, above 50 for RSI and above 0 for PPO, then they're bullish. And so Tesla looks constructive. If it can take out 755, our next Top side objective, remember, is 770. That's the next target. If it gets rejected here at 755, could come back into 740, which was the original breakout level. You can see it right here. There was a gap up the other day and made that big power move, and now it's been kind of grinding higher, but still more or less consolidating. It needs to take out 755. Microsoft. Soggy action after we had this explosive move higher. 305 has proven to be a big problem in a downtrend. Remember we said yesterday, may come down to this 297.5. We had the level marked. Why? We had that level from right here. What did price do? Came down, stopped on a dime, reversed, and actually broke out of the downtrend channel. And I know at least one person in the trading room that bought that, so good for her. Got in, at support, sell resistance, buy support, TA 101, and now she's got a little breakout working. And what I would do if I were her, then you can move your stops up to just below this 299.50. Maybe your risk tolerance is 299, something like that, and hope for a continued move up to this 301.75, 302 area. You get a breakout there, then you can look for another move back up to 305. But in general, Microsoft has been weak, and it doesn't feel like Microsoft is going to make some big bullish move if the Qs in general are soggy, or a lot of the FATMAAN names are soggy. But you can just go level to level. What would be really concerning is a break of these prior lows. Then you open up a lot more downside down into 294 and then down into low 290s. So that would be a concerning look. Amazon. There were some really, really nice trades yesterday. Yesterday in the pre-market, I hypothesized that this looked a lot like a double top, where price came up to the prior high, could not take it out with bearish divergence in place. That's still basically the case, because if you look, price is still below that prior high. But a lot can happen within the day, and that's what happened yesterday. We had a pull in to 3,500, and then there was a fast ramp up to 35.43. Then it reversed, came all the way back, and then retraced again. So we had 40 up, 40 down, and then 40 back up again. And so, like on a 60-minute chart, you could easily look at that and say, oh, well, it's kind of a nothing day, nothing really happened. But if you're an active trader and you get these unidirectional moves of $40 in a straight line into resistance that we had marked, right? We had that marked. 35.40 was marked as resistance. Everybody saw it. Everybody was aware of it. Price was aware of it, went up and tagged it and got rejected. So, I mean, if you're an active trader and you get these $40 directional moves, 2 and 3 times a day, that's real money. And we've got a new trader in the trading room that has been playing Amazon like a fiddle. And what I was saying in the trading room is you only need one. And if there was one stock to understand and trade well, And if you can trade it well, Amazon, there's a lot worse places to spend your time than figuring out how to trade Amazon. And you don't need to trade 80 stocks. You need to understand just a handful. And if you can trade and execute well and get these days, where the stock is active, and for the most part, Amazon is an active stock. It's a lot more active than it was, last year. You can make a ton of money. And I'll just share one of this trader's strategies. Is, of course, she knows the levels, but when there is an opening low that holds a certain place, hopefully near or at a support level, but comes down, on a 5-minute low, and then like on a 15-minute low holds that area, she'll get long with a stop against the low of the day. So, that's trading 101. Get long against the low of the day. And you might be thinking, Chris, how do I know it's the low of the day? What if it's lower 10 minutes from now? Well, if it's lower 10 minutes from now, you just got stopped out, right? You honor your stops. You pick a place lined up with the chart with either a known support level or a place where price stops going down, can hold a 5 or 15-minute low where you can get a line to shoot against and set your stop and then get long. And she did not short, or at least I don't think she did, short the rejection, but she had gotten long. In her case, she bought multiple contracts. She was scaling out all the way up to resistance. And then when price came back to almost exactly the same spot, she recycled the whole trade again, because when price came back down, it actually formed a double bottom. Price stopped where it had earlier in the day, and then she recycled the trade, stop against the low. Now there were two lows, and got another $40 out of it. So she had a great day. One stock, one day, made a killing, simple strategy. It's all about execution. And it was fun to watch and very informative. So I hope that helps you a little bit. And you can use that strategy on any stock, anytime, on any time frame, right? You get a low in a stock, you can get long against that low, and hopefully it's at a support level. Then you got a couple things. Okay, Google, not really active, down 0.4%. I dropped in a downtrend line. Again here, we had this level already penciled in here at say 28.63 or something right here. Price rolled over, stopped on a dime right where our level was, and bounced. What the bulls got to see is this downtrend line taken out and break back above 28.90. That would really open up the upside. But if it runs into resistance here and loses 28.60, then you're probably looking at 28.40 rather quickly. But the levels are certainly well defined there. Netflix. Netflix too offered a real nice intraday opportunity. Right out of the gate, it was red, but formed a little low, and then it came up like almost in a straight line up to like I think it was 615, 618, something like that, then reversed, came back down, and then bounced. But that was an active trade as well. And just like Tesla, notice the posture of the chart. PPO nice and high in the bullish regime above the zero line. RSI holding 50 up here in the bullish regime. So unless and until price were to come back down, break the trend line, break this support level at 597.50, let's call it right here, then you can maintain a bullish outlook for Netflix. And certainly if it were to break the prior high up here at like 613, then you can be long in blue sky. SMH, bad day at the office. Gap down, follow-up candle. If I were to, this looks a lot like Apple, bear flag. You can see it there. So if 268 were to break this morning, I would think price would come down to at least 265, and probably after a little baby bounce, fill this gap down to 264. So we've got that, classic bear flag look. And so I would be keying off of 268 this morning and see if that can hold. And if it can, then a recapture of 270 would be the ticket for more upside. Just want to show you this DocuSign. This was kind of before we had all the turbulence, right? Turbulence, we're down, 1% off all-time highs. But we had this DocuSign, and we had this flag type structure, and we had said, watch for a breakout above 315. Here's a classic illustration of why you don't front run breakouts. I mean, this looks so strong here the other day. Came up and tagged that prior resistance and just liquidated. So now, if you're interested in trading DocuSign, down here at the 50 and at the bottom of the range, you can use that 50 or even this 285 as a pivot level that, if this breaks, what's 285 to 315? That's $30. So if this 285 lets go, then your $30 move brings you down here towards 255. That would be your target, lining up with this support level down here. And if it can hold it, if things stabilize, then you can be long against the bottom of the box, long against the 50, right down here at 285. So looks like I don't like to say anything is do or die, but certainly at an inflection point, at a pivot point where it's either going to hold it and make a move back to the top of the box, or it's going to let go and come back down here towards 255 and possibly even tag the 200 if there's a lot of turbulence in the Qs. So let's wrap it up there. Hope you guys have a good trading day. I will reach out today with observations and trade ideas. Just going over things. I don't think this is a time to really load up on risk heading into OPEX, especially when we've got that historical perspective of spiking volatility the last 2 or 3 OPEX cycles. So we could be in for a bit of a turbulent 10 days or so. So I don't think, unless you've got some huge commitment to a position, to really load up on risk. I think it's time to protect capital, manage what you've got, and if you want to be selective on stocks you want to actively trade intraday, that's fine. But for longer term duration positions, unless you see something really compelling, I would let's see how the next few days plays out, and maybe we'll get a good dip to buy coming out of OPEX. So I hope those nuggets of free advice are helpful. Let's see how it plays out. This has been Chris Buss with Traders Profit Compass. Have a good day. Talk to you next.